What if your trading app could analyze your portfolio, tell you which stocks are doing very well, which stocks are not doing so well, analyze all the data based on the technical analysis and fundamental news out there? Would you trust it? Well, Trading 212 has just dropped a new AI button that analyzes your portfolio. And in today's video, we're going to go through it. We're going to have a walkthrough. We're going to talk about, is this just a gimmick or is this something that actually could be of benefit for you to help you analyze your portfolio and make better decisions? Welcome back everyone to the channel. So Trading 212, if you've been using the app or on the website desktop, you'll have scrolled through and you'll have seen that there's this new AI analyze button that is all bells and whistles and it looks very sexy. And what we want to talk about today, is this something that's actually going to be of use to you, or is this just an over on-trend gimmick that Trading 212 has added? It's being promoted as something that will analyze all your portfolio. It'll go through, it'll talk about what's been doing well, the performance, the recent trends, and it'll also identify what parts of your portfolio are predominantly risky. And as you know on this channel, guys, we like our risks. So when I push this button, I'm expecting to come up with saying your portfolio is rather risky. Supposedly this is based on all the data and the technical analysis that it finds, all based on the charts. So this, in theory, sounds like something that will be of benefit. As you know, I have several trading accounts. I've showed them in the other videos. I'm going to use my long hold one to push this button because I've actually used it on the high risk one. And as I said at the start of this video, it did identify my portfolio as a high risk portfolio. So I'm interested to see what this one is. This is my long hold play portfolio. I've got some high risk still. It's still in the right sectors of growth, but they're safe plays in terms of the fundamentals of the company are right. Plenty of cash flow, they're good earnings, they're stable companies that aren't going to go likely to go bust anytime soon. This is where I'm at. So I've got about 22 large in free cash, which is collecting a nice little interest within Trading 212. For those that don't know, you're getting in and around 4.35%, and that gets paid daily. So every day I'm getting about £2.70 every day, which is nice on that free funds. And last month I made about, well, just shy of £100 in profit just from the money sitting in there. The reason I've got so much free cash is not that I'm not bullish on the market. I'm actually a bit more bullish now than I have been. It's because this is something that I'm phasing in over time to get me the best dollar cost average. Anyway, as you can see, here is the AI analysis button. But before we play it, you can see the types of stocks that I'm in. They're all performing rather well, apart from BNM, which has been a bit of a horror show. And I'm actually going to buy a bit of BNM right now because it is had a bit of a sell-off, unfortunately. Oh, Jesus, I don't want to buy that much. I'm going to buy 100 shares and we'll just buy it at 33.5, which looks to be pretty much the lows of the day. Let's place that order, bring that price down. Nice dividend on that, which isn't going to look at the money that I have in. You can see the types of sectors that I'm in. I am playing with the big boys. I am playing with high growth plays. But generally speaking, I've got an S&P tracker there that is set up on the back of the Donald Trump bill. Just a cheeky grand in, and you can see we're up 1.88%, which is nice. There's my B&M buy that's just went through. Lovely jubbly. And there's a few other ones that are in this portfolio as well. But overall, the account balance is about £42,500, which is decent. All in my eyes, all tax-free. So without further ado, let's hit this button and see what it says. So we're going to hit generate. It comes up saying the data is generated by AI, blah, 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 blah. Pretty much saying don't take any accountability. If you do anything on this, you have to do your own due diligence and make your own assumptions and all that. It takes no responsibility for deciding how you trade. And that's the same as this channel, not a financial advisor. Do your own analysis, of course. But here we go, hit the read full analysis. You can see here, this will last for 7 hours, so you can update it every day. The portfolio exhibits a blend of concentration and diversification. That's good. That's what I wanted. This is my long hold play. I do want a bit of diversification, and you can see some of them plays some dividends. There is a nice hybrid mix there. The idea is things go down, you know, it's not going to be too rocky there. With significant allocations in a few large cap technology and consumer discretionary companies, alongside notable positions in consumer staples and financials, suggesting a strategic focus rather than broad market exposure. That's kind of it. I am heavy in the big boys and I am more tech orientated. There's no doubt about it. But there is McDonald's, there is B&M, there is even the S&P tracker, for example, Walt Disney. Dividend plays, bit more safer. We go down here, this talks about the exposure. This gives you an idea of where your portfolio sits. The portfolio is predominantly invested in individual equities, complemented by a smaller allocations in an S&P 500 tracker fund and a clean energy exchange traded fund. Sector wise, the portfolio shows a strong emphasis on technology and consumer discretionary, with substantial holdings also in consumer staples and financials. Geographically, the portfolio is predominantly concentrated in the United States with some exposure to European companies, and that's just the way I feel the portfolio should be. I don't have great belief in the European markets, especially in the UK. I do have holdings because I may as well. I've got some companies there that I believe in, but realistically, historic trends would say the USA is the best place to be investing your money, and the majority of the biggest companies outside of the USA actually do have holdings in the USA, which again is another telltale sign for me that the USA market is the best. This is where it gets a bit more interesting. It's talking about the performance and the risk. The portfolio performance is varied, while holdings like Palantir, Uber, and AMD have shown strong recent gains. And I'm down on Uber at the moment, which is interesting. Now it's baking in the previous trend, so it's not necessarily looking at how my portfolio, and that's the first thing I'm looking at. This is meant to be an AI analysis of my portfolio. I am down on Uber, so I'm not too sure why it's saying it's done well when it hasn't. So this must be baking in just the general stock analysis as a whole, how it's always performed. Others, such as Tesla and Apple, have experienced declines, indicating a mixed bag of drivers. The portfolio carries a notable level of risk due to its significant allocation to high beta and high volatility assets like Tesla and Palantir. No matter if it's my safe hold play, still have to have a bit of high risk in there, guys. But I don't see Tesla and Palantir as high risk plays, but their valuations would suggest that. That's probably why this trading 212 AI analyst is saying that, though it is somewhat mitigated by some more stable holdings like McDonald's and Bank of America, which are my safe plays. That's what this portfolio is all about. I want my high risk, but I don't want, if the technology sector sinks, that my portfolio massively sinks either. These other stocks will hopefully balance it out. So here's some notable insights. Recent news indicates that Uber Technologies has received positive analyst sentiment with price target adjustments reflecting confidence in its growth trajectory. That's an interesting one. Again, if you're investing in companies, you probably should be doing your own due diligence, as I have. But if you didn't, I suppose it gives you a bit of an insight that might pique your interest to go and look at this further. Tesla's been in the news regarding CEO's stance on the potential mergers, which can influence investor sentiment and stock performance. Bit vague. If you didn't know what this is about, it doesn't really make much sense. What potential mergers is this something that is a good thing or a bad thing? This is to do with Elon Musk talking about the AI potential takeover of that, which is a good bullish move, but it's going to cost money. It's just a bit vague. I would like a bit more information there. McDonald's has also seen recent analyst price target adjustments, suggesting an ongoing evaluation of its market position and future prospects. Again, good news, or is it bad news? It just says notable insights, so bit vague. Blind spots is an interesting one. As it says here, there appears to be meaningful gap in exposure to defense sectors beyond consumer staples, which could leave the portfolio more susceptible to market downturns. The portfolio shows a high concentration in a few individual growth oriented technology stocks, which could lead to significant volatility if these sectors were to face headwinds. Fair enough, yeah, said that earlier. While there is some international exposure, the portfolio is heavily skewed towards the US market, potentially limiting diversification benefits from other global regions. Yeah, fair enough. It's decent enough overview. If you're looking at this portfolio and you're thinking, I've got a nice diverse portfolio, this AI is saying, you know what it is, mate? You don't really. Yeah, you've got a bit here, but you're still heavily focused on the USA markets. So I guess that's a decent feature. But for me, I'm like, well, I can tell you that. I mean, it depends on you as a trader. It depends on how much you're doing portfolio management and how much you're actually keeping an eye on everything. This could be a good feature if you're more of a casual investor, perhaps. But I do recommend doing your own due diligence, and I wouldn't particularly trust this anyway. But let's see what the key takeaways now say. The portfolio's current state is characterized by a significant leaning towards high growth technology and consumer discretionary sectors, balanced by more stable consumer staples and financial holdings. Exploring concepts like sector rotation strategies, risk adjusted returns metrics such as the Sharpe ratio could be beneficial for understanding and optimizing this portfolio's construction. So that's an interesting tip. It's saying to go and look into your Sharpe ratio, which is a way of being able to balance your risk allocations and stuff. So if you were completely novice, this is pretty good. I think this is going to give you a good oversight to your portfolio. It's going to tell you exactly what you want to maybe know about it. It's going to give you some suggestions to look into it, and maybe through doing that, doing the Sharpe ratio calculation, you might go, I might make this change, might make that change. My portfolio needs to be a bit more diverse. Maybe I should get a European play in or whatever. I guess I'm looking at this at a high level, going, I do feel that if you were a new beginner, having this little tool will help you. And then if you hit the AI analyst button tomorrow, there you go. You've got a new update, and it'll give you an update based on those changes. So there you have it. That's my portfolio now analyzed by Trading 212. The other one was a bit more funnier because it has so much high risk plays in it. And maybe if you just want me to do that one, I'll talk about that maybe in the next video. But that's a decent overview. I would say, yeah, it's more of a benefit. But as I said at the start of this video, I would always do my own due diligence. It does prompt you to maybe go and look at things like Tesla merger. What does that mean? You would go away and Google that. Sharp ratio, if you didn't know what that is, it would make you go away and Google that. So I suppose you're getting a better understanding of your portfolio. If you just wanted a quick high level overview on the daily, push that button. It might draw your attention to something that you need to know about these stocks. So that to me is of benefit, but ultimately you do your own due diligence as always. If you haven't already subscribed to the channel, please do. I really appreciate that. We're getting things going again. I hope you also found this video informative. If you feel like maybe I should do more Trading 212 videos, drop a comment. Is that something that you just want to see? What do you want to see on the channel? I want to try and do more higher quality videos rather than just covering our individual stocks on this channel. Please like, subscribe, as I said, drop a comment, and I will see you all in the next video. Peace.